I am a little unnerved this morning. Unnerved. Because I am not seeing the proper risk management that should have been learned in the last 10 days. 10 days. If you screwed the whole thing up all year long, even now you could reset, but I'm unnerved by not seeing that. So the whole rant about why I'd like to have a non-mark-to-market dividend yield, I mean, that's a bit of a rant. Let's go to, and this, Darius was in this meeting. We had a meeting with one of the biggest large cap growth managers, equities only in America last week. And he actually gave me a pretty good framework of how to think about a growth stock. Now, hopefully I don't mess this up, and I know he's watching, so he's gonna see if I get it right. But he was citing one of the great growth investors, Herb Ellers, and his process. And I thought that this was quite good. There's three big things he'd say that you need to buy. And it's a good thing I write things down in my notebook, because now that I'm trying to answer this question, I went back to the page where I wrote it down. Mm-hmm. He said, number one, I want to buy a business, not a stock. Number two, I want to own quality secular growth, not cyclical growth. Very important lesson there, I'll get back to it. And number three, don't overpay. Mm-hmm. That last one's going to get you. If you bought Netflix 2-3 weeks ago, it got you. Boom. Mm-hmm. Don't overpay. Now, there's a lot of stocks that have corrected, big time. You know, there's a lot of stocks that never had the move to begin with. You know, look at Microsoft. It's not coming off its 1999 high. That was a great growth stock to get invested in, I think. But again, think of those three things. And where we have the most value to add to your process is on the cyclical versus secular. You know, Caterpillar is a great company, I'm sure, but only when the cycle has demand behind it. Okay? That's very different than when everybody says, I want to be along the FANG. They call it the FANG, the Facebook, Amazon, Netflix, Google. Okay? Okay, well then don't overpay for those things. You know, we're talking about the biggest multiples and biggest market caps, by the way, if we want to define what overpaying is in human history when we talk about the FANG. So we're not talking about this spot that, you know, we're just coming off a recession and we're coming off 30 to 60%, you know, type global equity corrections. We're talking about the U.S. equity market actually has been the one of the few, Japan as well, obviously, where you haven't had a 20% or more correction. But history would suggest that you're probably going to have one, and if you're not already in the middle of one. And that's what I'd have to say about that. But again, you buy a good business, not a stock. You buy quality growth that is secular, not cyclical, and don't overpay.